That was one trade that I wrestled. I was convinced it was going to move for me, and I kept opening up my stop, kept opening up my stop, kept opening up my friends. They got stopped out. I was holding on to it because why did Michael, rookie sensation ICT, why did he think that it was a smart move to keep opening the stop? That means I was widening. Okay, wherever I had my initial stop loss, protect the initial entry long. I was like, okay, I know I'm right, but I'm probably wrong where I'm placing my stop. So I have to just sit through a little bit more, open it up more and more, a little bit more, open it more. And I was like, okay, now this thing's looking like it really wants to go down, to go right to my stop. I'm going to just take the stop off. Well, that's when it fucking tanked. Okay. And I experienced $6,000 per contract. That's not fun. That's not fucking fun. Okay. Especially when you're not in front of the chart seeing it. It's just changing numbers. Okay. It's changing numbers on the screen. So I was like, okay, this is bullshit. This is painful. Well, that lesson, that pain, that uncomfortable state would have taken many of you out of this and say, I'm never doing it again. Was I embarrassed because my friends saw me lose big? Yeah, absolutely. I was fucking totally demoralized. But I turned it around. I said, okay, that's never going to happen again. I knew I was wrong, but I arm wrestled it. I knew I was fucking wrong. I was under the pressure of the market's thumb, and it was giving me all the time in the world to save my own neck, and I wouldn't listen. I came in with my preconceived notions that this is what the market's going to do. I married the vein. I sold my soul to that trade. I was not going to let go of it. And it punished me. It tore my ass up. And that's that gapping feature that I tell you about that I was afraid of. That's where I learned that lesson from, because the Swiss franc just kept going lower. And then in the next session, I'm holding over. It just gaps further against me. I'm like, what the fuck? Clearly, it's got to be done now. Nope. 4 days later, I'm still in there. No stop. No stop. And account gone. So back to saving money, working on the weekend, delivering pizza, getting some scratch capital raised up again, and I had to go back in and do it all over again. And the only lesson I learned from that at the time was, don't hold overnight on futures and currencies, because the gaps are too much. That was the only lesson at the time that I learned. But now, knowing that what I know now, there's so many things that I understand about price action that I would never have gone long now. As the trader I am right now, and it's not because I'm hindsight 2020 and everybody could be saying the same thing. I know things that I was falling victim to, and I was not paying attention to it because I was unaware. I was unaware. My understanding of commitment traders was not what it is today, just simply because the commitment traders were showing long positions by the commercials. You know, that was weeks before. Weeks before. They had switched to being bearish, net short position. That means if you're looking at commercial traders on a net trader position chart, they had more contracts net short than they were net long. So that means that they were shorting where I was buying. And I was that retail Rick that got his ass handed to him. And I learned years later to look back at that and say, oh, shit. This is one of those millionaire mega trades. And I didn't even see it or recognize it. So understand, this is the guy that you're learning from, okay? This is the guy that has more understanding today that in the beginning, at that time, I didn't know what the hell I was doing. I was learning all this stuff right then and there. I was learning it. You're having that same right now, that experience right now, but I'm giving you insight that isn't taught anywhere else until they learned it from me. But you can't get it watered down. You have to understand there's a lot more detail to all the things I'm teaching. And just because you're introduced to the idea, don't fall victim to thinking you're ready and go out there and risk money, because you're going to hurt yourself. And that small little hurt, that small little loss incurred, and all losses suck. They do. They absolutely suck. But in the beginning, every loss isn't a paper cut. It's like having your arm cut off. You're losing an appendage. You make it like that. You increase it to that level of influence, impact, when it's nowhere near to the degree that you really think it is when you have experience. Look back and oh shit, that was nothing. You're going to have a whole lot of paper cuts. Sometimes a little bit of gash here, gash there, put a stitch in it, staple it, shut the fuck up and keep going. Do the same thing you've been doing because you just did one small mistake. It doesn't change the model. It doesn't make the model inefficient. It doesn't make it ineffective. It just means that you messed up as the operator. Own it, move on. Don't dwell on it, move on. But if you have flawed logic right from Jump Street, you're going to lose your ass. And you're going to be miserable at the end of it because you're going to remember all the times that you subconsciously knew that you should not have been doing what you're doing, but you didn't listen. You couldn't bring the amount of strength and discipline that's required to simply say, I'm getting out of this. This is wrong. I'll worry about making the money back at a later time. But right now, I got to stop the bleeding because that's the first rule you got to do. Learn how to stop yourself from losing your ass. You're going to lose money, folks. That's a guarantee. You're going to lose money. Every trader loses. They do. I have learned where I lose the most, and I try not to trade in those instances. In April, I took road trips. I said, fuck this. I'm not doing this. I'm not going to get out here and call something that I know the probabilities are so low for me to be accurate. Why feed the trolls? I'm not going to do that. I'm going to practice what I preach. If I don't see some reason for me to be in front of the charts, I'm getting the fuck out of Dodge. See ya. I'm out of here. I had a lot of fun. Relaxing. Spent my time with my family. It was great. And then I got back home when I felt things were changing. You were told in advance where we were expecting the NASDAQ. You were told where we were expecting the euro, the dollar. They behaved exactly as I outlined them. You can't change that. You can't discount it. You can't say it wasn't real. It's not hindsight, and it's not cherry picked. It's 100% understanding. And to answer some of the folks that were crowing to me, can you teach swing trading? Can you talk about higher time frames? I don't want to look at a 1 minute chart. It's just, I'm never going to trade a 1 minute chart. Okay, that's you. But that same idea of understanding what price does and how it delivers, what makes price book the way it does. You can study hundreds of examples over a course of a few months in 1 minute data. And that same logic being applied to a daily or weekly or monthly chart, it's still the same thing. It doesn't feel like that could be true, but it's exactly what it is. Because price, here's the major discovery that I had that was a major epiphany. I thought that the market was independently doing things, randomly all the time, when it's not. It's not doing that at all. It's working from higher time frame charts down to lower time frame charts. It's trading to where liquidity is resting, obvious, below old low, below old equal lows, or above old high, or above relative equal highs. That's liquidity, okay? If you have already ran that liquidity, and you, for instance, let's make the argument that you're bearish, okay? You're bearish on a market, and you want to get short, and you go into price data. Look at a weekly chart. It supports the idea that you think it's going to go lower. Daily chart looks like it wants to go lower. You can clearly see where it would likely draw down to some old low or relative equal low. You want to look and see, has it gone into buy side recently on a daily chart, a weekly chart, or 4-hour chart? If it has, and it's sharply moved away and started going lower, you are in right now a sell model. That means it's already started its movement. So someone that we're going to deem as smart money, someone's short. Their interest in this is for it to go to an opposing pool of liquidity, which is what? Sell side. So your first objective is to look for low-hanging fruit. You want to go to you want to go to a 60-minute chart to find some relative equal low or single low. that has not been traded to recently, there are sell stops resting below that. That's this market 101. You don't need to read books to know that. It's simple logic. If it moved up from there, chances are someone's holding a long position and their stop loss is right below that low. So the market's going to gravitate to that. If there's a large fair value gap, some kind of a buy side imbalance, sell side inefficiency that's below that, then you can view that as I'm taking a partial at that short-term 60-minute low, and I'm going to try to get into the high of that buy side imbalance, sell side inefficiency, the highest point, which would be like an institutional order for entry drill. If you were long or bullish, we're not doing that here. The example would be making the argument that we're looking for lower prices. You would look at the highest point of that buy side imbalance, sell side inefficiency, and then the equilibrium price point. That's how I would treat it. And then I would wait to see, does it want to move lower? I would use the consequent encroachment of that BISI to trade short if it was supporting the idea it wants to move lower. I would not be trying to trade the full closure of that buy side imbalance, sell side inefficiency. That separates me from the people that think they understand that, oh, it's going to go there because gaps have to be filled. They don't have to do anything. Those gaps can stay there for a long time. And they can stay there longer than your fucking equity can stay in your account trying to trade to get that gap filled. So there's rules to this. Okay, there's levels that are understanding, and engagement has to be defined, and you have to be disciplined. Like, you have to know what you're looking for, and it has to be in writing. Like, before I do a trade, I have an expectation of where I want to see it go to. It's written down. Same thing I'm having right now. I have a small little notepad, and these are levels I'm looking for. It won't mean anything to you. I know some of you are like, can you show me it? When you do that, it's literally just me writing down a price. That's it. In my mind, I know why I wrote it. If someone picked it up on the street and said, oh, this is ICT's secret instructions. It's not. It's just, these are areas I believe that the market's going to draw to. In my head, I have the narrative in mind as to why it would do that. I don't have time, dude. I'm trading on a 1 minute chart, sometimes less than that. How long does it take you to write down? I believe that 4111 and a half is sell side liquidity, and fuck that. If the market's already gone, it's left. It's already left the station. Elvis has left the fucking building. It's gone. You can't do that kind of stuff. If you're day trading, you can't journal as you go. You journal after the fact. But when you're studying and tape reading, you just mark down what you think is likely to draw to, and you do that on your chart. Like, you do that on your chart, so that way it's there. And then you study what you have seen. Did it really do that? How did it behave when it did it? How long did it take to do it? Did it go there and just fall short of it in reverse? All these things are worthwhile studies. But some of the best seasonal tendencies are the ones that fail. I mentioned that in core content when I talked about seasonal tendencies. And that was an observation I really found on my own. I'm not trying to take credit for it or try to make a big deal about it or be dogmatic about it. But when I expected certain seasonal tendencies to behave a certain way in certain markets, when they failed on me, they did it in stunning fashion. Like, it was really something to be doing the opposite of. And that was a major help to me when I would lose money trying to go long with what I believed were seasonal tendencies. When I got my ass handed to me, I grew to trust the fact that I can be a short seller because of that pain. When I was taking a loss in a series of losing trades, trying to force my will on a seasonal tendency that I thought, like, don't look at these seasonal tendencies as a panacea. They're not be all end alls. They're not going to be cast in stone where it always works. They don't always work. And while I wanted to see the indices present that opportunity, when I was going through social media, everybody was expecting it to go lower. Even the news was talking about, oh, stock market's going to go down, the stock market's going to do this and stuff. No, I'm aware that the debt ceiling was an issue. I was aware of all that stuff. We talked about it. But the technicals, the price action was showing us that it wasn't willing to do so. It had unfinished business on the upside. So because of that, we've been maintaining our focus on going long. And for the folks that don't pay attention, you see them. They're the same individuals that tweet like, but what about the seasonal tendency though? I thought we were supposed to go lower though. Okay. There's a there's a measure of common sense that you're going to have to use when you're learning this, especially with me, because I don't have patience for stupidity. If you are not paying attention to the fact that I'm looking at these markets and calling higher prices, I'm pointing your attention to this particular level. I'm looking right there. If it does this, it comes down and treats this fair value gap as an inversion fair value gap. I think it's going to go up to this buy side liquidity. It's going to go up to this premium volume imbalance. Does that sound bearish to you? If it does, you missed the plot. Go back and start from square one, because I wasn't trying to get you in shorts. I was taking your attention, pointing to those weekly imbalances. Why? Because that's the macro perspective. That macro perspective sets the tone for the market is willing to do the opposite of what I wanted to see. Well, I wanted to see the seasonal tendency. I wanted it to materialize. But because it was stagnant, it was just chopping around. In April, while I was down there, sitting on the beach, I'm thinking to myself, you know what? It would be just like them to not send it lower. So where would I want to look for if price wants to go up? I need to take a look at that weekly chart again. And then that's what I shared with y'all. None of my tweets get deleted. They never get deleted. I don't edit them when I mess up and fuck up something or I misspell something. It is the way it is. Okay. Go back and listen to the Twitter spaces. Okay. I'm trying to help all of you, but I'm teaching you practically based on what we're seeing in the chart real time. Where is it going to go next? I could do that all day long in 1 minute charts, all day long. Every major fluctuation intraday, I can be a part of that, up and down. I get losses from that. I will incur losing trades by doing that, but I can play that all day long. Making $19,000, $20,000 over the whole week using multiple contract or accounts of demo. You know, I can do that $19,000 in fucking one session. I don't need your bullshit. Okay. So when you look at these other folks out there, they're going to try to distract you from learning this, because this is going to help you and it's going to minimize what they're doing. Their strengths are going to be reduced by your ability to do this without any indicator, no crutch. Not one fucking thing needs to be applied to your chart except for your own notes and annotations. And that flies in the face of the majority of everybody on YouTube. More people is going to join the hate wagon, okay? They're going to, because they think that's going to be a way for them to overcome this monster, this Frankenstein ICT is. I'm just an average dude, man. That's it. I'm trying to help all of you. I'm not victimizing any of you. I'm not going after your YouTube channel and trying to talk shit about anybody. And when you do that kind of stuff, it makes you the wrong kind of influence. Like our community here, everybody that sells a service, they'll say our community sucks. Well, they say that because they call bullshit when they see it from their YouTube channel. When they say that price is being bought up and buying pressure sends price higher, when you know differently now. But they don't like that because it goes against their narrative. Their selling points are those things, those features that appear in books. So it goes without saying, of course they're going to say our community's toxic, because we're calling them bullshit. They're not doing the right things with the markets. Even if they're making money, they're attributing their happenstance being right. And I've had lots of that in the beginning. And these folks are 20 years old. They're fresh out of high school, most of them. And they're teaching. What the fuck are you teaching? What not to do. That's what they're teaching. Don't do those things. This journey of yours, okay? This journey that you're going through, you're going to have peaks of mountains that you're going to reach the top of, and you're going to feel like you've conquered everything. And then you're going to keep going forward. Well, if you're at the top of the mountain, what's going to happen? You're going to have to go down. Keep going forward. Well, that means you're going down. But you're going to view that going down period as the end of your career. And you start pushing too hard on your trades and forcing things that aren't in the chart. So what I did was I used the information that I gleaned from pain, blown accounts, real psychological warfare that I put myself through. No troll can say anything to me that would be more painful than I've already done to myself in my career as a 20-year-old Nobody could do anything to me. Nobody can do anything, say anything about me to make me fucking lose sleep. I don't give a shit. Okay. But you, as a new student, whether you're learning from me or anybody else, you're highly influenced. It's so easy to manipulate, and you're malleable. Like you can be manipulated to the point where bad news about anything that you're trying to do will convince you quickly, and you'll use that as a perfect excuse to say, okay, it's too much effort. Yeah, it's definitely a fraud. It's definitely a scam. It's this stuff doesn't work. It doesn't work. When it does, you just simply haven't put the time in doing the right things. Okay, there's people out there that spent a lot of time doing stupid shit, watching videos only. You got to be in this, looking at the price action, studying it, going through the process of measuring how much drawdown the trades occur. How often does these fair value gaps form? I've literally removed all of the fucking guesswork and reduced it down to a 60-minute time window. Okay? 60-minute time window, gave it a cool ass name, the silver bullet, because that's what you're looking for, a fucking silver bullet that never misses. Okay? If you understand narrative and you know where the next draw on liquidity is, you have a 90% likelihood of making fucking money if you know how to trade and use that model. There's nobody else out there can say that shit, because their indicators, they don't know when their indicators are going to change and say it's overbought, oversold, or it's a divergence. They don't know. They're a victim of that shit. They're waiting for that train wreck to happen. They're waiting for it. I am telling you where this shit's going to explode. I'm telling you where it's going to go to. I'm telling you what time it's going to form. What guessing game do you need to make now? What guessing game? Between 10 o'clock and 11 o'clock, every fucking day, there is a gap that can be found from a 5-minute. If it's not on a 5-minute, where do you look? Okay, drop down to a 4-minute. Oh, I don't see a gap there yet. Let me drop down to what? 3-minute. You learned that in a 2022 model. Some of you are pretending like you never even watched that stuff. You didn't figure that out yet? You have to go down. You're doing a top-down analysis on intraday chart, on micro market analysis. 5-minute. That's your high time frame on intraday. When you're in the little time frames, 5 minutes is like a fucking weekly chart on a 15-second chart. But I don't want to trade that way. Then don't fucking trade that way. But use the information on the higher time frames. You guys bellyache, the people that do bellyache, you're bellyaching about things that I've already addressed. If you just simply watched the videos and kept good notes, I've already talked about those things. But you're fucking lazy. You want me to take you to the video at the minute marker and save you all the time and effort of going through it properly. And you learn more going through it the normal way. You think that one thing you're wrestling right now is going to be the thing that makes it better for you to start making money. That's not how it works. Because when you learn something new, 20 more fucking questions pop up. You know what that's called? That's fucking progress. Okay? That's progress. And you're afraid of it because you're stepping into the unknown. You're stepping into a field that is extremely technical. And all the results are contributed to your decision making, your execution, your pushing of the button, your not or placing of a stop loss, the amount of leverage that you're applying to that trade. That's all your fucking fault. It's yours. You need to own it. I'd never sugarcoat that stuff. And the people that bellyache the most are the ones that are doing all the wrong things. And they're thinking that there's something new I'm going to teach that fixes that. When it's you. You are. That was me when I was younger. I did all that same stupid shit. I was the reason why I was blowing those accounts. It wasn't the market. It was me. I knew what I was doing most of the time was wrong right before it would stop me out. And I still wouldn't get out because I was arm wrestling it. Well, I had a perfect opportunity, a perfect stage set for me right now, just recently in the last 6 weeks or so. I introduced what I would like to see the seasonal tendency pan out. I said that. I said it in Twitter Spaces. I said it in a YouTube video. I audibly made myself and talked about it in tweets. But if the market in itself is showing us it's not going to do that, I'm not that same 20-year-old neophyte. I'm not the guy that's wrestling with his emotions about being right. I don't need to be fucking right. It's actually better. It's better when I'm not right. I can teach you when I'm messing it up. I'm a human being. If I make a mistake, how are you going to deal with that? How does ICT deal with it when he does it wrong? Look at what I did on Friday. like 11,000 something, whatever it is, in terms of trading up and down, up and down. And I forced myself to take shorts that I know that could potentially pay out. But the bias was what? Reaching that weekly volume imbalance. I even type it out. This is not a short. You're all going to see it. So I'm communicating that, yes, there's a short there, but it's not the short that I would really want. I want to be long. And I showed you the history, every little trade, every little thing that went through. And I think it was like $975 losing trade there. But on the grand scheme of things, it's nothing on that day. You wouldn't even feel that. If every one of those trades were made by you, would you be worried about that $975 that would have been a loss? For some of you, it's like the end of the fucking world. It's the rock in your shoe. You can't go any further. I can't do this anymore. It hurts too much. You're not ready. So how do you fix that? Go back into back testing. For the guy that sent me a tweet this morning, he said, what do I do if I'm able to see the draw on liquidity? Well, first of all, you got to understand, are you able to do that, or are you using mine? Because if I'm calling the market direction and you're falsely attributing it that you can do that, because many times students come to me in the early stages, they think I'm ready because I'm lending you my experience. I'm giving you my 30 years of experience reading these markets. That way you can decide on where you think the market's going to go. You can ignore me. You can fade me at your peril, but I'm telling you where I believe the market's going to go next. And look at it. We've been doing it for a couple of years now publicly. And you decide, is it accurate? Is it accurate or not? If it is, that's what keeps you here. That's what keeps the community growing. Because if I didn't know what the fuck I was doing, I would be canceled already. Be like, this guy don't know what the fuck he's talking about. You see it. You see the evidence of it. But are you really able to see the next draw on liquidity? If you are, what model are you using? What's the multiplier you're using? What PD array are you using to get into a trade? Is it always changing?